I can be accused of overcomplicating the issue, but what it actually all comes down to is that price action is key. Price action is absolutely key, and anything other than price action can be described as being just a crutch, something to actually lean on to try and just sort of help us along. And if the crutch is taken away and we just have a bare chart, there are going to be some traders who are going to be completely all at sea and haven't a clue what's going to happen next. But there are going to be those traders who think, my goodness me, clarity at last, I can actually see what is going on. So what my message is that, number one, we got to keep it simple as possible, and that is to have clarity in our charts, which just might mean running it down to just the bare minimum that we can see. But part two is that there can be some enhancements that A, we understand, we've got to understand whatever these enhancements are. It can't just be a sort of a black box, magical background or whatever. And if we can start to understand one or two of these things, then we can carefully add them onto our charts. Now, let me just say that I'm carefully now adding on this value finder. And the value finder can come into its own by picking out certain areas where price is getting a little bit overextended. And if we just use, say, this red line where price pops above the red line, then that means that it's getting itself, in the jargon, overbought, and it could well be ready for a correction back. So we've got a couple of these on the chart, which I'm just sort of showing these areas where price has actually moved well and truly, well, I say well and truly, it's moved up above this red line. Well, let's just do another one where it's actually touched the red line over here. And lo and behold, that's a time when what we should be doing is not buying. In fact, what we should be doing is to look at perhaps selling there. Or indeed, we should be, supposing that we had got a profitable trade on, we should be looking to take some of our profits there, because the last thing we want to do in trading is to give back a substantial amount of our profits. So that's a little add-on, but what I'm going to do is just to then sort of point out that this, as we can see, from the bottom left, okay, over to not quite the full, the right-hand side, we can see that this is moving on up. So if we can see that we've got an established trend on the way up, and that is a trend, you know, going from here right the way over to here. That's a truism. Then what we can sort of ascertain is that we need to be buying at the lows and selling at the highs, wherever those highs happen to be. Now we can actually use this value finder just to help that process. And what we then want to do is to give ourselves just a way of being able to take our positions based on whatever this is actually doing. And what we can do is to then look at these extensions on the downside and notice now that as this is in an uptrend, we're finding that the red line at the top is being hit from time to time, but the red line at the bottom is not, okay? But the blue line is. So what we could do, we could look at the blue line, and at times when price is starting to move from the blue line and is starting to move on up, then they're perhaps the areas that we should be thinking about buying. So there we are, we've got another one just over here. It's just sort of popping up from that level, and that's actually picking out some neat little buy areas for us. In fact, we've got more. We've got more. Well, it's actually just after that one, as we can see. So on up it goes. We then get into this area over here on the right, where price has actually popped just down to this blue line. But what has actually happened now is that, we've got it moving on up, but price has actually not gone up, and it's slipping back. So it's now starting to fail us, this little system that we've actually just devised. So I'm going to go and wind back a phase now. Let's wind back one, and we'll just get rid of these things and have a bare chart again. And let's just run that down so that we can barely see the thing. And I'm going to look at this ever so slightly differently. Now, I'm just going to bring this over so that the line at the bottom just starts off, okay? And it starts off with this lowest candle. I'm going to move this slightly over. There we go. I'm going to move it over. Just extend it right the way on up. Right, we've just about got the level there. So what we can now see is a trend line. We can only draw in a trend line when we have got two very, very clear areas, 2 points. We've got one at the bottom, and I've picked up a second, okay, just here. And I'm only going to draw this line in once price has gone higher than the preceding higher high to that point that we put in. So it doesn't get drawn in until then. Once it's gone higher, it becomes a valid trend line. Now, what you can also see is that before we'd actually got there, we did have a much sharper trend, and we would have a valid trend line just there. But again, once price had gone above there, we can actually draw that in with some validity, and we've got a trend line. Anyway, let's just come back to the bigger picture. Just remove that one and that one for the moment. And what we now want to see is that once we've actually got this in place, what is it actually telling us? Well, what it's actually telling us is that whilst we've got this more or less a 45 degree, so it's a beautiful uptrend, while we've got it in place, then we want to be long. So we get it bouncing off here. If we wait for the upside breakout here to buy, then okay, that's fair enough. That's a buying opportunity. Price then does go higher, and it puts us into the money for a couple of days, and then it comes on back, and it puts us out of the money for a while. We're actually losing money. We're actually losing money here. It then bounces further up, and I'm not going to move this trend line, but if we then get a close below this trend line, it's actually telling us that just maybe that was not the right trade after all. And if we look at this, there are two occasions. This occasion up here, where it was in profit. We've then got this further occasion up here when it was in profit. And lo and behold, it comes back down to our entry level, having pushed through that trend line, but then it bounces on up again. So what's happened to the trend? Well, the trend has actually altered somewhat, and it's moved. So let's just redraw this. Let's remove that one, put a new line in. And we can now draw that one in once price goes above that level. So if we're going to now take the breakout trade up here, Once we've got this trend established, we can see it's a whole sequence of higher highs and higher lows. Then we buy, only to find that it comes back down and we go from a profitable position to an unprofitable position. It breaks through the line, we close it for a loss. So what we've got to do, we've got to add a little something in here. We've got to add something in which helps us buy at the right place and sell at the right place. At the moment, it's sort of all the wrong way around. It's upside down. It's not helping us at all. So the trend line idea, yeah, that's fine, but we need a method of looking at an area where price is well worth buying. And let's just come up with a very, very simple method of just using price action. We'll leave that value finder down below because we've just said we're not going to use it. So if we now look at price having gone up really quite substantially, okay, and we draw in a couple of lines. I'm going to draw in that line, and over here, okay, I'm drawing in another line. So this is the deal. Where we've got a downtrend line, and price then breaks up above it, we want to find a level at which we want to buy. Now, we could just buy on the break of this trend line and put a stop underneath, right down the bottom here, at the bottom of the chart. We could do that. We could do that. We could come up with a system which is going to use some candle analysis, and this further test of the low, just down here, actually did result in a higher low. So on completion of that candle, we can see that it's got a long lower tail, so it's a bullish candle. We could buy at that level. We could actually buy just in there. So we've now got a system. It's broken the trend line. We've waited for it then to follow through on the upside. It hasn't done so in any meaningful way, and it's moved on down. Now, to save whipsawing, we might actually now just want to move that up a tad. I'm going to move it to there. The reason for that is that on this little downtrend move, what we've got is a couple of highs there. It's a little double top. And what the thinking is that if we can find a bottom where the price moves up, it breaks the previous trend line, sloping trend line that is, and then price moves above what is the last lower high in the previous trend, then the odds are going to be somewhat further in our favor. Now, if we could buy in that area, then okay, that's fair enough. That is going to sort of help us a wee bit. But we want to be exceedingly cautious when we do buy breakouts. It's still a breakout of a previous high. It might be wiser just to wait until we get this consolidation zone, using a little bit of candle analysis, where we can take a long, right there, on the basis that, here we are, I'm just going to put this, a little line in, where price has actually gone lower, then it's gone higher, it's completely engulfed, and we can get a relatively tight stop in. Certainly an awful lot tighter than the stop would have had to have been on here. In fact, it's going to be half the distance. We're going to have half the risk. Price then goes up, it comes back for a correction, it forms a higher low. We then get our sort of trend line in, and we can just follow it on up. Once we've then got a very, very clear reversal candle, as we have here, where it completely engulfs several previous ones and breaks the trend line, that might be a good place to go and take partial profits. Now, what are we going to do next? Well, price comes down, and it comes down to, let's just remove one or two of these lines for a moment. So it comes down to this general level, which when we look to the left, we can see that that's an area where price actually found some support. And sure enough, it finds some support again. Price then from that big engulfing candle comes down in a zigzag zig. Now by a zigzag zig, what I mean is that we get a move down. We then get a move up. We get a move down again. Well, subsequently it does actually come a little bit lower than that, but let's just move it down to that line. Now, a zigzag zig can also be called an A to B, a B to C, and a C to D, or in Elliott wave terms, we can just call it an ABC move. Now, those ABCs are really quite useful because what we can identify with them is that price then moves in this zigzag down, and very, very often at the end of a zigzag zig move, then it's actually ready to move on up. And move on up is exactly what it does. Now, in order to just help us with the entry area, we can actually draw yet another line. Here we are. I'm just going to bring that one down. We can draw a line. So once price actually breaks above it, this is the rule. Price has to, first of all, has to have gone through an ABC zigzag zig. Part two, price has to move above the trend line and break the trend line. And the next part of it, the next bit of the rule is that price must have put in some form of correction with a higher low, okay, before we got the buy. So we've got the move up, we've got the move up. We then get the correction. Now this correction comes back and it just pops through here by the odd pip or two, and then it moves on up. And look at that, we've got a nice little Hallmey candle, and so we could take the long right there. Couple of pips above. Where is the stop going to go? Well, it needs to go just underneath the bottom of that Hallmey. And we then need just to stay with this trade for as long as we possibly can. But along the way, what we often find is that price will actually move up, rather like this. Look at this, we've got another ABC move, and then it'll correct back down. And we never quite know, got the benefit of hindsight here, we know it went higher, but when we're actually in the trade, we never quite know whether it's going to wallop back on us or not. So when we've got a profit which is equal to the amount of our stop loss, let's build in another rule that says we are going to take partial profits. So if we've gone, say, 2 lots long, what we need to do is that when we're in profit by the amount of the stop loss, we need to now close one of those lots and take profit on it. So if price then did come right the way back down through our original stop loss, we've made that much profit, but we've lost that much on the stop loss. So we end up with a break-even trade. And that's one of the most important trades to ever take, break-even trades, to not lose money. Well, in the event, what we can see is that that didn't actually happen. Price came down towards that previous low. It then accelerated higher. And for those who follow candles, then what we can see is that price did go lower, but then it went higher. And as it went higher than that previous candle, in the direction of how this trend is building, then that becomes another buying opportunity. And that buying opportunity then we can run up with it, and we can draw in yet another trend line. This time it's going to be a fairly sharp one because we're going from here and we're just following it up. We're looking for any little correction back, and we find it just there. Oops, just there. So we're going to be very cautious here, because now if we've entered yet another trade, we've got a substantial profit in relation to the risk. And we want to make sure that we don't lose money on the trade. At the very least, we want to break even. At best, we want to make a reasonable profit. So we can now start to see how this has been moving on up. It's moved up substantially. It's moved up more than the stop loss. And we can then bring a line up and just follow it up behind these previous candles. And we're preserving our profit all the way. Now, what we might want to do is to split the trade again. So we could move half of our position. So on one lot, we're going to bring the stops up behind these candles. And half is going to be placed at break even, at that level. Now, at some point, what we're going to find is that we just bring that up under the preceding candle, we're going to find that our stop profit is hit, and it's going to get hit just about there. So what we're doing, we're preserving the profit, the paper profit, and we're going to sit tight with the other half of the trade at break even, so we cannot lose. Now, it's going to get hit at that point. Price then does move on higher, and we've now found that the yellow line, the uptrend line, price is actually now moving below it. And so that's telling us what any of these indicators would tell us, CCI, value finder, whatever it is. It will tell us that, yeah, price has actually moved up substantially, and it's now ready for a correction back. We can do that without any indicators. We can do it purely based on drawing a line and just observing price action. Well, several candles later, what we see is that, yeah, price did bubble over. It went higher, then it went lower, so we got an engulfing. And the price came on down. We then got a money management question to ask ourselves, and that is, are we going to leave this stop down at break even from that trade? Are we going to do the same from the previous trade that we had, or are we going to stay with it? Well, we've taken some profit a couple of times on the way up, and what we can then do is to look for the next zig, zag, zig. And we find it here, zig, zag, zig. We can put a line across. We can just pick a line from that level. Once price has actually gone lower, we've got to be a little bit careful with this one, because we might have looked at it here as being the break point. And we might have been just a little bit suckered into a trade. If we took this one, then we can see that we've got a very clear zig, zag, zig, or ABC move, and we've got price action, which is showing us that we've got a hammer candle, got a bottoming candle there, showing quite clearly then that it's found some support down here. And then we've got several narrow range candles with a very, very clear engulfing. And that gives us, as that passes up through and has engulfed, we've got another buy. And arguably, it's at this level. Price then moves on up, and we then just follow the same principle of putting a trend line in. We're picking up 2 points, price having subsequently gone higher. we're going to do the same money management again, that when the profit is equal to the amount of stock, we are going to either take our profits or let it run and take half our profits, I hasten to add. We're either going to let it run or make sure that if it does run, it never comes back to lower than the position which is equal to the amount of stop loss. Anyway, on up it goes. We then get one of these shooting star candles, which is telling us that, yeah, the chances are we're going to get at least a temporary reversal here. And that's exactly what does happen. We get another ABC type move, and price looks as if it's going to move on up. Use yet another one of these little yellow lines, a very neat little trend line. Let's just adjust that to, yeah, it's more or less correct. We're going to wait for price then to break through, to do a pullback. We get the pullback, doesn't move higher until we get this next big engulfing candle, which tells us to get in yet another trade. So let's use this line to get in on the trade. We'll put the stop, initial stop, just down below the candle that actually got us in. Once price then moves above, okay, and the profit on that new trade is equal to the stop loss, which it more or less is, within a few pips, then we're going to do exactly the same again. We're going to close half the position. We are going to move the stop to break even, and the chances are that on this little correction, it may just catch it. Well, if that's the case, then so be it. Price subsequently goes higher. We'll put in yet another trend line, and we then just stay with it. The trend now is starting to, it's moved a long way. So from the original trades that we were getting in right the way down here, we will now be sitting on 1, 2, possibly 3 lots from the previous trades, all of them protected. But what we don't want to do, we don't want to give back all of this accumulated profit that we've got tucked away here. So we're going to start to move our stops up. And what we might want to do is to make sure that the trend that we're following, when and if price pushes back below one of these major areas of higher low, we want to be out of the trade completely. Now, let me just tidy this up a wee bit. And if we just take a look at this, we've got a line just here. That is the last higher low, or main higher low, in this move on up. So at the very least, our stop profit needs to be at that level. But we also might want to move it up by what is around about 65, 70 odd pips and move it up to this level. So let's just let that one go. And if that is now our stop line, we will have seen that this major trend line has now actually been broken. We've got an A, a B, and a C, but we've actually got an engulfing on the downside. So it starts to suggest that just maybe this correction is a little bit more serious than some of the previous ones. So let's just draw our trend line in. Price has attempted to move above it, hasn't really quite taken it yet, but we've now got some indication that it does want to break this trend line. This is the correction, and we're at a key place. We're now at a key place. If this can turn around and form a higher low and move higher than that level, then we just might get another run and another rally here. If we don't, the decision to move that stop up to there was the right one, and we could then be moving into a downtrend. If price goes lower then than that previous low, this trend line wants to be redrawn to pick up on that point, but not until. So that's just a way of trend trading without lots and lots of indicators, just by using a few lines and looking carefully at what the individual candles are actually doing with their price action moves. So there are, folks. That's just one way of trading to keep it very, very straightforward, very, very simple, without any special add-ons, without anything that might get in the way of confusing the issue. So there we are. Right, guys, I'm going to have to leave it there. I think we've more or less covered the time that we had available. Many thanks for listening in this morning, and don't hesitate to get in touch with me. Good to see Stephen, Richard, Panel Fire, Edward, Fernando, a whole series of names I know, Ron, Jim particularly, and Adinda. Many thanks indeed for running this for us today. So if you want to find out any more, then do get in touch with me. Grab hold of Forex Trading for You. It's an entirely free, very comprehensive book on trading the Forex markets, and be only too pleased to work with you in the future. All the best for now. See you next month.